Get ready, we're about to start the show.
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week. And a look forward at what might happen in the next week. And hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market had its worst week since last November. That's since the election. The excuse is that the health care bill did not get passed. They've been going back and forth on this, and even as I record this show, there's some doubts that they have the votes to pass the bill, as it appears that Paul Ryan is headed over to the White House to let the president know that. And the stock market, which was getting a little bit of a rally today, is starting to pull back again. It's been choppy, and it's been a down week. It was extremely stretched, way overdone on the upside. So clearly susceptible to reacting to news, and volatility has ticked to the upside. That might be something that is going to continue for a while. Market leadership has deteriorated. There are many financial stocks that have had pretty significant breakdowns on their charts. We did a video on that on Thursday. If you remember, you can go look at that in our stock sectors member area, or you can become a member and take a peek at that. So we had a big down day on Tuesday. The S&P 500 fell about 1.2%, and we actually predicted that we would get a 1% down day this week. So that ends the longest streak in about 22 years of 1% of missing 1% moves, essentially. The one follower sent some information that said that one is really interesting, that historically it's normal for about 1 in 4 days to be a 1% move, and this was the first 1% move of this year. So you got to say, well, if we're going to get anywhere close to the average, well, there's a lot more to come. And we think that's actually true, as volatility is very likely to pick up in the coming months. For the week, the Dow and the S&P 500 down about 1%. The Russell down about 2%, as the second and third tier of the stocks were a bit weaker. And the NASDAQ still by far the strongest, only down a fraction for the week. And you can thank really Apple for that, as it continues to be an absolute tower of strength. We have other markets that have moved in directions similar to what we had expected. The dollar was still weak, and that pushed gold and silver to the upside, actually beyond the levels that we had expected them to rally to. And we think that that's going to end soon. That whole scenario of the weaker dollar and the stronger metals, at least temporarily, because the patterns that we look at are suggestive that the dollar is about to get a rally, and that is going to probably change the tone in the precious metal. So we're going to be looking for some pullbacks in there, and we'll be looking at in our member video of our short-term view of the coming week. So we think that gold and silver for the moment has probably had the best of it. The bonds were strong also, and also moving through the upside targets that we had expected. 30-year bonds up about 2 full points, and the 10-year yields fell from 2.50 to about 2.41, so that's a 9 basis point move, and that's a pretty big move for the week. Oil still very weak as U.S. drilling has increased, and the worldwide glut still remains. That's despite OPEC's production cut, so really no help there. And it seems like the U.S. production, our market here, has taken up that slack, and the oil market has remained quite weak because of that. So it's interesting that Donald J. Trump, he has to fight for absolutely everything. None of this agenda that he has is going to come easy, and of course he's got term limits, and it's probably he expects that he'll only be around for one term, so he doesn't care, right? He's just going to keep pounding and try to get his agenda done the absolutely best it can. It's plain out sickening. I mean, when you look at the rest of Congress, and even the conservatives, the Republicans, seemingly focused more on their jobs than doing that which helps in the long term. As far as healthcare goes, the Republicans would rather, keep that program as an entitlement. Like we need another entitlement, rather than to do things that are pretty dramatic to get health care in line. They're simply, with the program that they put forward, ignoring the budgetary problem, and the cuts, the savings they were supposed to get out of healthcare are nowhere to be seen, despite the fact that the CBO scores it to be somewhat favorable to reducing the budget. It's doubtful that it would be that, and it's nowhere near the savings that they had expected. So as far as I'm concerned, for healthcare, they're way off. I mean, simply, we should cover those people that absolutely can't take care of themselves and let the free market handle the rest. All of this entitlements, all of this putting money into the system from the government, that pumps up inflation, that pumps up prices, and I don't know why they don't see that. I mean, is it only us clear-thinking libertarians that can see that when the government subsidizes, when it puts money in, that the market efficiencies are completely lost? And that's what causes all of the problems. But they're never going to get there to that point. So I'd rather just let the free market handle it. So everything that POTUS wants, I mean, he's going to run into roadblocks here. And he's going to have to just absolutely keep fighting. And the stock market is going to be influenced by that, just as it has this past week. We're going to see, I think, a much choppier stock market environment than the one we have had since the election. I think maybe now or in the next month or so, I think we're going to see a very large pickup in volatility. And the correction which we've had in the market, which has just really been a week, right, with one day to the downside, I think that is mostly over for now. And that we're going to probably be getting the market now looking towards Donald Trump focusing on taxes and whether we get a health care bill or not. And in the next couple days, I think that we're going to start to see the market look towards moving back up to those recent highs. It's not all that far away, is it? The market correction was only about 3.5% from the high overall, which is really relatively small. And I think that overall, though, upside is going to be much tougher to come by. And though I think that we're likely to get a test of those highs, that's going to be about it for this market for a long time. And I actually think that come into the summer, based on all the work I do, that the market's got some real trouble moving forward. So test of the highs and then maybe some pretty good trouble. All right, so now let's look at what the stock market did this week as we look at our 60-minute chart of the S&P 500. As we look at the gray area, which is the trading overnight, and the white area, which is the trading during the day. So if you look at Monday, you can see that there was actually quite a slow day in there, as not a whole lot went on. The market did move sideways and then moved a little bit lower. It was, basically a little bit weaker. The big news was the G20. They removed the anti-protectionist clause from their trade discussions. And, there's sides of when you hear that, there's some signs of a trade war right there. May is to trigger Article 50 on March 29th, and there's all kinds of wranglings going out there about financial companies leaving the London area, and the costs that are going to be imposed on Great Britain by the EU, and that really has not affected the British pound very much, which has still been quite strong. Now, the NASDAQ was stronger here on Monday as Apple has continued to help. There were some positive comments out of Barron's that really helped Apple also. Tuesday, we had an early rally. I mean, basically ticked up right over here. You can see that. But then the selling was enormous as it came in. China was talking protectionism. The dollar fell and the euro moved up strongly based on a poor debate performance out of Marine Le Pen in France, which gave her opponent a lift. So that again was pro-euro, and that helped the euro move up. But this big decline in here, that was just simply a market ready to move to the downside, as we had bonds and gold rally as the stock market moved down. Retail stocks, materials, financials, they fell extremely hard. Wednesday came and stocks, well, they followed through on the downside in here, but then recovered to small losses. Everybody was waiting for that healthcare vote and listening to all of the news. Thursday, they tried to rally. The healthcare vote was postponed. I swear there was rumors about it, because this break here came before the news actually came out. So somebody was leaking something to the traders out there, and they pushed the market down before the news that they were going to hold off on voting because they didn't have the votes to pass it. So the market gave it all up, finishes a little bit lower on the day. And on Friday, stocks basically quiet. And there were durable good orders were really strong, and you would expect the bond market to be weak on that, but the bonds are up a half a point today. It's probably much more about the expectation that this healthcare bill is not going to get passed. What gave the market a lift earlier were the techs, as they continue to be strong, much stronger right now, even as they're up about 1/3% for the day on Friday, while the S&P 500 is right around unchanged. They're up a couple pennies. So Micron, fantastic earnings. I'll talk about that in a minute, and that is what helped the market early on. But we're still waffling up and down here as news keeps leaking out about the healthcare bill and the fact that, well, the votes are just not there to pass it. Maybe they'll pull something out here over the weekend. But Donald Trump is going to focus on taxes next, and I think that's what's going to make the market happier in the next week when they start reworking this healthcare bill and start focusing on the tax situation. Here's the calendar for the coming week, which looks like it is very much empty, as you don't see a lot in there. As far as earnings reports go, not much in there at all. Red Hat after the close Monday, Darden before the opening on Tuesday, Lululemon after the close on Wednesday, and lowly BlackBerry on Friday before the opening. Economic events, not really much in the way of market movers in there. GDP can move the bond market there, as you see on Thursday morning. that could potentially move the bond market. But it's consumer sentiment here on Friday, that can move bonds a little bit. But overall, I don't see any big market movers in there when you look at that. So that is the opening segment for the week. We're going to now jump into our best and worst stocks for the week. All right, for the best stocks of the week, I don't have very much to show you in here. Here we had a down week for the stock market, and that down week has certainly affected the stocks that moved lower, but the stocks that moved up, well, there really isn't much there to report. We're going to take a look here as we look at just a few of the strong stocks for the week. The best one for the week, and I've already mentioned this stock, is Micron. Man, did they ever report some really good earnings. And I think that the commentary about their outlook may have been what really gave this stock a look. I mean, they're just really raised their outlook pretty significantly, and the buyers really did come in. Let's take a look here as we look at the cycle chart on Micron, MU. Now, we always start out with weekly charts for the people that are new, and I know there's always a lot of new people watching what we do here. Whenever you see a dotted line in here, it means we made some little bit of a small revision in our cycle analysis. When you see the solid line, you'll know that our analysis has been pretty much where you're seeing it for a while. This is actually a great look at cycles in here as the stock rallies and corrects and rallies and corrects. The short corrections in duration, like you see here, make the stair-step upward move and the bullish stock. We were super bullish in this stock last year and then had to bail when it had a breakdown because, well, it simply was not cutting it. It wasn't performing, the company. And finally, they got their self in gear. And you can see in here, as this stock moves up sharply, here's 4 weeks into this advance. You know, this is really a long way there. And I think that up 11% for the week, they're probably going to stall a little bit right now. They've come a long way on this move, and generally when you have those kind of big moves, you get some stalling. So stock really performing well, company performing really well, up 11% for the week. Analysts are all over this one, raising their targets like crazy on the stock, upgrading the stock. So it's got some massive sponsorship in there. The next one we're going to look at is Marriott, M-A-R. Marriott is in a group that has been really strong, hotel and gaming. We featured Wynn Resorts just a couple weeks ago, and it's exploded to the upside. Here you could see the cyclic action also in here, and you can see that it's following the cycle patterns beautifully. Now, note the rising phases right in here. That's the early parts of these cycle rhythms, and you could see the stock rise. Note the corrective phases, and you could see that's where the stock corrects in just beautiful market rhythm. Right in here, the expected low, timing-wise, was right here, and you could see that as it turns up. Only 2 weeks into this advance. Again, like Micron, a really, really big move, but I would say you look for a little stalling or a little bit of pullback. But overall, I would be suspicious that the stock's uptrend will remain in place for a while. Really do like this whole category of stocks in this group in the hotel and gaming. LVS, Wynn Resorts, really looking like nice patterns. Now, the precious metals, they were strong this week. That's the metals. Interestingly, that the stocks were their relative gains were not all that good. Usually, when gold and silver is strong, you get some really solid upside gains. That exactly did not happen this week, as the stocks like GG, Gold Corp, and Newmont, AU, they were up like 3%, 2%, some not very big gains in there. The one stock we're going to look at is PAAS. That's Pan America Silver. And this one, we have a feeling in here that though this one has got a 4% gain for the week, the best gainer in this group, which should have been a stronger group, as I'm saying, got a feeling this one's going to have a pullback. As a matter of fact, we put something out on this one to our subscribers as it got this lift right up here to the moving averages. And you can see the way we have this drawn. We think gold and silver are going to get pullbacks right now. And that will coincide with the stronger dollar, with maybe a stronger stock market coming up, and we would expect this to pull back in here under $16. So we've put a setup in there for our subscribers. And I think when you look right over here, you could get a good idea on this daily chart of how we have this projected. So it gets up close to that minor resistance, and then we expect it to be pulling down. And you can see it has a pretty sizable 2.8% down day today in there. So I hope our subscribers are doing well on that one. So believe it or not, that is all I have for you for the best of the week, and we're going to show you the worst. All right, like my little characters there. For the worst of the week, we're going to look at a stock that just absolutely pains me to bring to you, and that is CSIQ, 18% loss on the week. You know, sometimes there are things that just look like great values and turn out to be value traps. Well, what's a value trap? I mean, essentially, it's when the fundamentals, the numbers all look right, the valuations look really good, and there's just some stuff in the background that is keeping the stock from being able to move up, and then all of a sudden the news starts to show up. CSIQ, earnings miss, revenues big miss, guides to the downside, and we've already accounted for lowering estimates in the last about year and a half, 3 times before this. So this is really sad, because I have loved this stock based on pattern, based on valuation. I thought it was building a big base. It is still potentially building this base. If it gets under this 1025 area, I am not going to like it. I'm really not going to like it. You can see in here the pattern is suggestive of maybe another month on the in this zone right over here, and then turning up. I'd like it to hold 1025 so that the bullish scenario can stay in place, but down 18% on the week. This was a bad week for this group. Take a look at SPWR, as SunPower is down 12% on the week, and that has made a new low. And Donald Trump is just not supportive of alternative energy. And a lot of these stocks we hear make some good deals as far as sales go, but they're just not able to turn it over into earnings. FSLR, which was just looking like it had a potential for a base in here, then just breaks down in here, gets underneath that low. Also, you can see another what happened is that it earned in 2016 425, but then it got these massive earnings downgrades here to only 67 cents for 2017. Their forward PE in November was still around 50, so this one, we were really skeptical on here. We liked CSIQ. We thought First Solar was just way overpriced. And the whole group is just horribly weak. So a bad week for this stock, for this group. GameStop GME. This is a horrible look. Also, we were wondering whether these retail stocks, any of them that look decent, could hold up. Now you see these two blue spot. We call those timing spikes. That's the week that we expected, or the time frames that we expected on this weekly chart for the low to be made. Now it's come down just about a week after that, but it's been 100% return from this low right over here to this low over here. So when you give up 100% of a gain, you usually are not building a good base. Hence our projection right in here that in the next week or two it probably makes a bottom, maybe get a rally for a month or so, and then we think back to the downside. This is a very, very bad pattern. When you look here at the daily chart right over here, you can see in here it had this kind of downward channel going on. There was a double star, evening star, if you follow candlesticks, with a big warning. Momentum turned negative in this stock right over here based on our momentum, our favorite momentum indicator, the slim ribbon. And here you have this massive high volume gap right in here. High volume gaps usually take care of most of the decline, maybe a few more days in here as it runs past and then tries to get a bounce. But this is a crippled company, a crippled stock, and their online business is just not cutting it as far as making up for the problems with being a brick and mortar store. So steel stocks, they were also weak. You know, we've mentioned that the financials had some pretty significant breakdowns, and that's part of the reason why we believe that the upside in the market is going to be tough fought from here on in, because we don't think that those leaders that were going to benefit from the Trump agenda are going to benefit from it, and if they do, maybe it's not for a year or two, and so they got way ahead. And AK Steel falls 10%. Take a look at this chart, and you're going to get a look at what a breakdown looks like based on my type of analysis, and that is when you get a cycle violation that we have right in here. So this line right over here is the base metals. So this analysis is not really focusing on that one. It's on the black line right over here, and you could see that what we have is a nice cyclical rhythm. The low due right around here, and you could see that is where it came. It rallied. It only got up to about 1/3 the distance, and then came down and broke that low. That's a cycle violation and a very bad bearish warning that AK Steel is now going to resume this downtrend that goes all the way out into June, July. Now, like I said, I think summer months are going to be trouble going into the summer for the stock market. This is an example of that. U.S. Steel, you can see here as it's in that yellow zone. It hasn't broken this low yet like AK Steel did, but it's given up a lot of this move, and we would consider this to be a very bearish stock. Also, a decline projected out into June. So if there was a rally in U.S. Steel based on something that Donald Trump says about stimulus, I would not believe it. I think it's a total fake. SCHN, Schnitzer Steel, there's your cycle breakdown there, also projecting out into May for this decline or further out. So that is another look at a very, very bad breakdown. And that is why we believe that there's trouble out there, and that those leaders that lifted the market, they're starting to break down. You're not going to get leadership out of the steels. I mean, it would be a very low odds that they recover out of these type of patterns. If you watch that video I mentioned that I did on Thursday that talked about the financial stocks, the leadership from there is not likely to come either. They may get rallies, but I don't think that they will hold those rallies. So you see that when you look at the steels, you see that when you look at the financials and other groups also. I'm going to show you Goldman Sachs in just a couple of minutes, and you'll get an idea of what I'm looking at. Right now we're going to look at Dillard's, because the department stores, they continue to have problems, and DDS is a stock that is just in a horrible free fall breakdown pattern. And you can see, let me just get this closer in so you can see this. This was another one of these breaks of the cycles. You can see right there. This points to a low out in the end of May or June. So when I see these breakdowns that are pointing out to June, then it says to me there is problems for the stock market as we get into the summer. I don't really need to show you the charts in JCPenney, down 5.5%, down 8%. The stock is now 5.5 on the way to 2. I keep saying that. It's now made a new low. We've had SHLD now trading at 840 when it was in the 20s. We said single digits. That's now trading down 7% on the week. And Macy's is down also 7% on the week on a pattern that just is not pretty at all. And this one actually maybe 3-4 weeks from a temporary low. Remember, it got the pop when the rumor was that I'll show you that here on the daily, that Hudson Bay was interested in it. Right over here it got that pop, and then Hudson Bay couldn't get the financing and it started to break. And that's pretty typical when a small company tries to buy out a giant company. They just can't get the financing. So that's the story on Macy's. We think another few weeks on the downside in there also. Take a look at Ford. Now, Ford was a stock that I really thought was buyable in this period over here between these two blue spikes time-wise. But it had this giant break on the downside in here, and they came out 6% down on the week, and they guided sharply lower. In fact, they cut their earnings estimates by 50%. Man, you can see our projection on here. Look a little closer as we expect it to bounce into the intermediate resistance zone right around there. Maybe the stock gets to 12.25, but then after that down again as these patterns just continue to keep getting worse. Here's your daily chart right there, and right over here you could see our orange arrow as it had gotten extremely oversold and now is trying to bounce. But that orange arrow, by the way, is our option bias rankings, and that's for our option traders or short-term traders. So really valuable information there. So Ford down 6% on the week, and really that is a very disappointing pattern also. So the financials, the one that I really want to show you is Goldman Sachs. Morgan Stanley has almost the same pattern in here, and it's ugly. I mean, it really is speaking to the fact that this rally that we have had in the market, which was led by the financials, is basically over. I mean, like I'm saying, I think we're going to get a test of the stock market highs. But when you get the market leaders, I mean, look what Goldman Sachs did. The stock rallies from 160 to 247. Basically, right, 255, sorry. So here's your pattern in here. Rally, sell off right there, rally, and a nice correction right there, and a rally to new highs, just like it was supposed to do. But now it's testing this low, very close to taking it out. Just testing it is ugly, ugly news. And now we're likely to get some kind of a bounce off support here. But this is going to push down until around the beginning of June. And that's likely to take this stock in another leg on the downside. We're going to look for somewhere between 200 and 208 in here, as this looks like a top forming complete failure. And you might get a right shoulder built in here, which gives you a rally up to like 240 or something like that. But man, I think it's going to be a sale if that happens. Fifth Third Bank, Morgan Stanley, Wells Fargo, all down 4% on the week. Goldman Sachs down 5%. And many of these financial patterns are just looking very, very questionable. And I think that the leadership is breaking down, and market is probably going to have some trouble after it tries one more to the upside. All right, so we're that's the best and the worst for the week. And in just a moment, we're going to get to the short-term view. Take a look at what we're all about. All right, this is our short-term view for the coming week. We talk about the stock market here. In our member video, we talk about 5 different markets, taking accountability of what we said in the last week. For the 5 major markets, we were pretty solid, 70-75% accurate. For the stock market, well, after some weeks of struggle, we're going to say spot on that one. What we said last week was that we thought that it would be a down week for the stock market, and that it was likely that we would see our first 1% day on the downside, which we did, and that was really a good call, as the markets really got some dramatic selling on Tuesday. Now, there's some indication in here that I just gave you a lot of bearishness in the show, believing that the next rally in the stock market will fail, that it's not going to get that far. And the shorter term patterns that we look at, these things are, in my opinion, giving much better reads of the market as far as a bottoming is going on. The timing, I said last week, for this decline, this corrective period, was really ending, and that I thought that the window for that correction was closing, and that it was likely that we were going to start to see that decline. It would be quick, and then we would probably see the market moving up again. I actually want to show you that pattern, what our expectation was, and where I believe we are moving forward right now. So take a look here at our chart of the S&P 500. Get that in place, and here it is. So what our expectation was that we would have this down day, and it would get down into this support zone. So our target was really around 23.33, which it almost exactly got down to. Now, there's what's going on right now is that the time period is ending. You can see these 3 cycles right in here. This is a cycle that is about 9 or 10 days. This is a cycle that's about 18 to 20 days. And this is the much bigger weekly cycle that we impose over the daily chart. So now where we are is, note the in this support area, I'm going to take a real close look in here so you could see this. There is a Harami cross in there that I want you to see. I don't know why this thing just got grayed out, and now you can't see that. It'll probably take a couple seconds, but I want you to see that cross right over there. That's the body inside of that body. And what harami is in Japanese is baby, so it's a body inside of a body. And that harami cross is kind of a rare pattern. What it really means is that there is a stalling going on in the market. There we go. That cleaned it up. And now you could see it pretty clearly there. So we're in this bottoming phase. We're going to look for the market to basically not have a lot more downside. Maybe we get another day and a half on the downside in here, and then start to move up. As you could see, we have that drawn. These 1, 2, 3 patterns right there, those cycles, are going to start to lift during the week. So on our notes, we have essentially this that shows up. That's what it looks like on our notes, because that's what our expectation is that there's just modest downside left in the market in here, and that after that it starts to go to the upside. We're going to call this an up week, and we're going to say that it tests this area up in here, this resistance. Now, the middle of the resistance right over here, this, we'll call it a minor 50%, is at 23.63. The top of it right over here is at 23.69. That's what we're going to look for. Just a little sloppiness early, and then a rally getting up into that zone. Then after that, we're going to have to see what's going to prove to us the condition of the market is in these rally phases, these 2 right over here. So it's like a 9-day phase like this, and then another rally. That would be the sum of these cycles right there. And these rallies, these two phases right over here, are going to tell us the condition of the market. Now, in the past, those early phases have gotten big upside moves, as you can see right here and right here and right here. Now, if you can't get a big upside move and you don't start blasting through the highs like each of those did, then that's going to be a negative sign. And we're going to learn from the condition of this rally that we're looking at. Note the head and shoulders in here, and right over here was the target right around 2309. That's the measurement of the head and shoulders. If it so happens that we get what we're looking for, the rally in here, right, and then the roll over towards that measurement right there, this would be a horribly bearish occurrence, because it would mean that this downturn in here has got very severe downside pressure. So we're going to be looking at all of these rally conditions and seeing how well they perform on the upside, because that's basically the tell for us in a rising phase. How strong is the market able to rally? So we think we're going to get into one of those in just this coming week, and then even into the following week. So bottoming in here is what we're seeing. The healthcare bill probably doesn't matter, because we think the focus is going to move over to the tax bill, and we think that's going to start to bring the bulls back into the market. So that is the short-term view for the coming week, and we're going to look for a stock market that is going to be able to maybe get a rally and hold it for at least a day in the coming week. That's it for Market Week this week. I hope there was some good information for you in there, and some good ideas and opportunities. I want you to be careful, because it is so crazy out there, and we're always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been creating